Hello again, everyone. It's This Week in Agribusiness meteorologist Greg Solier. We're in for Max Armstrong. This is Farm Progress Dateline Drought. Hopefully you're making it by the best you can with this latest run of heat and humidity. Not quite as torrid temperature-wise compared to a few weeks ago, but feeling just about the same. We talked about the fact that humidity dew points will be up considerably in that mid-60 to almost mid-70 degree range, depending on your location across the plains and Midwest, and that will certainly help to push and elevate those heat index values to almost the same criterion level that we had a few weeks ago. So it's really just splitting hairs on what's going to be pretty challenging go of it, not only in the short term the next couple of days, but by and large the next 2 or 3 weeks. We talked about this in the big TV show This Week in Agribusiness over the weekend. That 4-week forecast indicated that maybe sometime in that first week of August, a change may be in the offing, especially for the northern sections of the Corn Belt and eastern areas, the heat getting pushed back to the west. Otherwise, we're going to be back into the same scenario. Some fronts that will oscillate through the upper Midwest, dropping temperatures to above, to some days much above. Same will apply throughout the Great Plains. There's really no sign of breaking down 95 to 105 degree heat from Iowa and Missouri back westward into the Great Plains anytime soon. And some of these boundaries will at least bring about a little more refreshing air mass, drier air, but temperatures still very much on the warm side over many eastern Corn Belt areas. Really the main emphasis here, though, these systems that come in northwest to southeast, they don't carry a whole lot of moisture. There's a bit of a boundary or a weak front trapping a lot of moisture along the Gulf Coast area. It's northward transport at least. So we anticipate basically a dry scenario, a couple of scattered showers and thunderstorms. Best coverages where we've seen them, where they do break out over the next week to 10 days in the upper Midwest, Great Lakes region. We did get some rain over the weekend, by the way. Hopefully you did get something. There were some spots around Bloomington, Normal, Central Illinois, for example, that had a quick inch or two worth of rain. Some spots just enough to settle the dust. These fronts that come on through here in the short term, the next 3 to 5 days, will carry a little oomph to them, more so into the upper Midwestern reaches. But again, extending through the rest of the month of July, here it is. We put together a graphic, and there's not much promise here, with a wide and expansive region of much below normal precipitation centered on the heart of the Corn Belt, areas through the northern Rockies back into the valleys of California. And it's pretty much usual for the time of year. Nice to see at least some promise of monsoonal moisture playing out over areas of the southwestern states, near normal moisture into areas of the deep southeast and in through Florida. Some of those Gulf Coast areas over the past week to 10 days have seen upwards of 2 to 4 inches of rain, easing up dryness and drought over areas of the southeast, but ongoing till further notice across the heartland. That's a check on weather. Now here's Bryce Knorr with a check on markets.
Thanks, Greg. Markets from stocks to soybeans took their lumps the past couple of days, but all seemed forgiven on Wednesday when futures staged a broad-based rebound rally. Soybeans led prices higher in Chicago. November futures initially saw follow-through selling at the start of the overnight session Tuesday, taking out the limit-down lows. But futures made a stand and held, strengthening when the mood brightened in Europe. Hopes that central banks are finally getting a grip on financial problems prompted buying in stocks, giving fund managers a green light to buy soybeans again. Futures rallied into the pit open, survived a round of profit-taking, then ended not too far from session highs. November gained 46 cents to close at 16.15.5, while August was 45 higher at 16.94.25. Still, futures weren't able to close back in the steep uptrending channel for the rally, but did complete bullish reversals. Demand remains good thanks to strong meal prices and export sales that are expected to come in around 16 million bushels on Thursday. So far, the market seems to be shrugging off ideas China is starting to cancel earlier purchases after booking too many beans. Today's good close came despite somewhat wetter forecasts just as storms start to move into the Midwest. Midday models push rains over the next 2 weeks further into the dry reaches of the Central Plains, with 6 to 10 and 8 to 14-day forecasts also wetter. December corn, which closed well off limit-down losses on Tuesday, saw more quiet strength today, though prices finished off their highs. Near-term demand kept September from holding a move back into its uptrending channel. Ethanol production in the latest week fell again, and basis in the export market weakened as well. Traders don't expect much improvement when weekly export sales data comes out tomorrow, though the total could be up a little. Wheat prices were higher today, and for once the move reflected more than just Me Too buying. Rumors that Russia might ultimately ban wheat exports revived concerns of a repeat of the 2010 rally, despite that country's sale of 5.5 million bushels to Iraq today. Morocco is also tendering for 11 million bushels of U.S. soft wheat, while Libya may be back in the market too. Jordan again rejected a tender for wheat as it struggles to find grain at a price that it wants. Thursday's export sales are expected to be solid, around 18 million bushels.